for tuning in. This is the Aurora market update for March 2026. Let's jump right into looking at the overall market when we're looking at the GTA market. This is kind of a breakdown from what Treb releases on their market watch each month. So first we're going to look at their headline. The market is tightening, but buyers still hold the cards. Current phase is a late buyer's market with early tightening. So we can see at the top right hand side, we have deep buyer's market over to a seller's market. We're sitting just at the beginning of a tightening market. Now we did have a little bit stronger of a March, so it is leaning towards the more tightening side. But let's face it, there's a lot of different catalysts in this market that could potentially shape it and even bring it back to the deep buyer's market again. Potentially, we'll get into that. So if we're looking at the supply shrinking faster than demand recovers, so we have 16.7% fewer new listings this March compared to last March, and we also saw an uptick of 1.7% more sales this March from last March for the Toronto Real Estate Board. So decline is slowing, the floor may be forming. So prices are year over year still down 6.7%. We have starting to see some month over month strength though as we go into the spring market. So prices on the month over month are starting to flatten out a bit here. And then we're going to jump into the buyers still discounting, sellers conceding. So in some areas today we're going to look at, or for new market, in some of the neighborhoods, we're going to see that some sales to new listings ratios are down to 95%. So sellers are willing to take a bit of a discount here in this particular market. More than likely, they've had the property up for a long time. They've done already a couple of price adjustments, and now buyers come in with a little bit lower of an offer, and they've just taken it. So we'll deep dive into that as well. Sales to new listings ratio is still in a buyer's territory. It's sitting at 34%. Anything below 40%, you're sitting in a buyer's market. 40 to 60 is a balanced market. 60 above is a seller's market. So it's definitely in a buyer's market still when it comes to that. We've had a bunch of rate cuts. We're in a potential interesting year because bond market's telling us maybe 2 rate increases this year. It's hard to believe that that could happen, but based on the data that we're seeing today, we have to assume that that's a possibility. So we need to factor that in. So anyways, this is not a rebound, it's a transition. Supply is retreating, demand is stabilizing, and prices are still soft. That's how every market bottom begins. So we'll look at some charts. We'll see if there's a market bottom starting to take form. Let's see what the data is telling us at the end of the day. The opportunity window, buyers still have leverage and inventory. There's lots of inventory out there. Buyers still have the leverage. There's no doubting that will likely be the case the majority, if not all, of the rest of this year. But are we going to come to a point where we're starting to see a leveling out? Prices have started to reach their max. If you're not getting an influx of new listings hitting the market, sales are starting to increase, taking some of that supply out of the market. That's when you start to see a little bit of the tightening. And typically sales will lead prices. So you'll start to see the sales uptick. Prices will start to come beneath them. So if you follow me on a monthly basis, we cover all this data to see where it's heading, right? So what we need to watch for, if April sales hold above the 5,000 and listings stay below 15,000, tightening is potentially confirmed. If listings surge past 18,000 while sales drop, then March was just a seasonal bounce. Any Bank of Canada rate cut could start to bring demand, but like I said, what we're seeing in the market is not suggesting any rate cuts as of right now, but that can change month to month depending on what's going on in the world. And then medium term supply pipeline drying up, 2028 could see a bit of a shortage going there. We're not building a lot of homes right now either. So let's go and look at some charts. This is every March going back to 2015. So how is March compared to last year and Marches in the past? So if we start at the top left on the median price, we can see that we peaked out in March of 2022 here, and it's been a slow decline down. We haven't got back to where prices were at the peak of 2017, but we are starting to get there. And in some other areas, which we might cover, you're going to see that prices have gone back to where they were at the peak of 2017. Transaction volume, we're still way down compared to where we've been in the past for transactions. Little bit of a flattening out there, but we also saw that back in 23 and 24 before it fell again down to 4,965 to 4,880. New listings volume. Again, it's fallen down a bit, but it's kind of in a range where it's been at or around where we saw March 5th, 2015 to about March 2020. So in this market where like this is more of a market where things are just not being absorbed on the sale side. So that's why we're getting such a large active months. Average days on market, we're sitting at, I can't see it there, but I believe it's in the 30s, which is significantly higher than what we've seen in any other March dating back. And then active listings historically, we are down to 21,650. So we're down from where we were of March 2025. So that's good to see that active listings have potentially started to peak here, and months of inventory as well, sitting at 4.5 months of inventory. That might have peaked as well. So what we're going to want to see is when April stats come, May stats come, are we seeing similar trends year over year? In those, give us a general idea of, okay, maybe we're to see a floor here. And then we want to see the economic pressure on Aurora housing for March 2026. So first things first, on the left side, this is the Bank of Canada rate path. So right now we're sitting at 2.25%, and we're looking for an April hold, a June hold, but July is a bit of a toss up here. We have 53% chance of a hold and a 47% chance of a hike. Whereas when we get into September, we're looking at a 73% chance of a rate hike, and December an 80% chance of a second rate hike up to 2.75%. When we look on the right side, the mortgage rates for this was around April 6, 2026. So this is basically showing us the 1 year, 2, 3, 5 year fixed and the 5 year variable. We're looking at the best rate, the average rate, and the change over the last 30 days. So we can see the most common ones people choose, the 5 year fixed and the 5 year variable. Best rate sitting at 3.89. Not everybody can qualify that, I understand. That's why we look at the average from big banks and some of the other big lenders. We can see that the average is sitting at a 4.49. That's not saying you can't get anything better than that. This is just the average that we're seeing in the market. And then the 5 year variable is sitting at 3.99%. So the big things we're seeing is a lot of people are getting 3 year mortgages, but those are starting to climb. They're up basis points over the last 30 days, and then the 5 year fix was actually up 16 basis points over the last 30 days. So as bond markets start to price in the potential for inflation, this is where we start to see fixed rates climb up. What's the economic pressure on the Aurora housing? Like, let's dive in macro side of it. So Bank of Canada policy rate sitting at 2.25%. This is something that could potentially go up. Now, a lot of the economists out there, a lot of the talking heads are saying that's just impossible because of all the debt in the system. But at the end of the day, if inflation fears are big enough, if they are high enough, let's face it, the Bank of Canada or the government of Canada is pumping a lot of money. They're printing a lot of money this year. The war in Iran has affected gas prices. It will affect food prices because a lot of fertilizer, nitrogen wasn't making it through the market. So it is possible that later in the year, the final 6 months of the year, we could start seeing some of those costs passed into the food, passed into gas, passed in a lot of things, because let's face it, oil has a big factor in a lot of things that we do. Consumer confidence was sitting at 49.4%, which was up 4% week over week, but we're still sitting below the 50% neutral rate on consumer confidence. And consumer confidence has a lot to do with the relative strength of the housing market. If we're not seeing strength there, we're not going to see a lot of it, specifically in the GTA Aurora markets. Unemployment rate sitting at 6.7% and potentially rising. We'll see what this month brings. But we cannot see a recovery in the housing market until this starts to roll over, because the more people that hit the unemployment lines, these are the less people going into markets to buy properties. And then looking at the wage growth year over year was sitting at 2%. So it is a multi-year low, and it's a bit of a compression when it comes to the In order for housing prices to recover and to sustain and for debts to be paid down, you do need to see a decent wage growth. Not to say that we haven't over the last couple of years, but it's definitely starting to fall back to the norms that we've seen at 2%. And I think it's fair that we would all say that inflation in our lives is sitting at above 2%. And then looking at labor force participation, that's sitting at 64.9%, down from the peak after COVID of 96.5%. And then population growth, probably on the negative side this year. So we're seeing for the first time in Canada's history a negative outflow in population. So let's jump into the Aurora stats now that we have kind of the market outlook and the macro outlook. When we're looking at the median sale price in Aurora, it's $1,055,000 for all home types. That's actually down 10% month over month. We likely saw really has very, very high end and more on the average home. So if we get a little bit more on the high end side for sales, it can definitely fluctuate the price a bit there. That's likely why we're down $116,000 for the median price month over month. And year over year, which is more normal here, we're down 7%, which is what we're kind of seeing across the market. Sales volume was 48 sales last month, which was up 11.6% month over month, and actually up 14.3% year over year. Still a buyer's advantage there, but moving in the right direction. New listings was sitting at 180, which was down 40% from last month, or 52 fewer new listings. And year over year, that's actually down 15.5% as well. So new listings moving in the right direction as well. Active listings was sitting at 273, and that was down 17.2% month over month and down 1.9, or actually up 1.9% year over year. Again, buyer's advantage. Sales to new listings ratio sitting at 27. It's pretty weak compared to some of the other areas that I cover. That was actually down 7 percentage points from February, which was sitting at 34%. And it's down 4 percentage points from last year, which was sitting at 31%. So definitely weakening when you're looking at the sales to new listings ratio. Months of inventory sitting at 5.69. That's up 14% last month and actually up 193% from last year. Last year, months of inventory was sitting at 1.94%. So big on that side. Definitely a tighter market last year just due to the amount of properties that were on the market. So a little bit skewed on the number side, but still months of inventory sitting at a high number. Average days on market sitting at 29, which is down 17% month over month, but up 70% year over year. Last year we were seeing property sell within 17 days on market, so now we're at 29. Again, buyer's advantage. And then sales to list price sitting at 97%. That's down from 98% in February and also down 4 percentage points from last year. Last year we were sitting at 101, so people were actually getting more money for the property than what they had it at list price. All right, next up, we're kind of looking at all types in a chart so we can visualize where their price is. We can definitely see the big fluctuations when it comes to condo towns. This is mostly due to the fact that not a lot sell, so it's very, it can fluctuate a bit. The detached price, very stable over since January. There's quite a bit of demand when it comes to detached in Aurora due to its desirability. Townhomes as well, down from where we've seen 2023, but not making, deep cuts prices there. And then looking at the condos, as the last one, it's been super flat from 2023 all the way over to now. We did see a little bit of an uptick here. I think it's just a 1 month deviation. It will likely start to turn back over because we're clearly in a downtrend when it comes to the condo market in Aurora. So looking at sales to new listings ratio sitting at 27%, like I said, months of inventory at 5.69%, definitely sitting in a buyer's market. So let's look at the last, from 2015 up until 2026, how is this March compared to a lot of other Marches? So when we look at price, we are basically right back down to where we were at the median price for the average for all home types in Aurora as we were in the peak of 2017. Transaction volume did see a little bit of an uptick from 42 to 48, but when you historically look back, still extremely weak sales. Typically, we're bouncing between 87 to 1, and then we have our upticks, but it's been extremely slow these last 2 years when it comes to sales. New listings volume, like I said before, it has rolled over. We went to 213 to 180. 180 is a little bit more in line with where we've seen new listings from up until 2016, 2017. Average days on market sitting at the highest we've seen since going back to 2010. Active listings, again, a little bit of an increase here. We've seen them higher when it was after the 2017 market, but potentially peaking out here. We've seen it before where it runs to and then it starts to roll over. We'll see if that continues. And then months of inventory, we are down. For the months of inventory, we need to see what April and May look like. Are we seeing the right trajectory when it comes to those? So one thing I wanted to highlight here was the spread between detached and semis. And we can see at the bottom here, when it's green, it's a favorable spread. When it's red, it's going to cost you more money to move up from a semi to a detached. So right now we are sitting in a favorable spot for if you're thinking about moving from a semi to a detached. The spread between those two properties is pretty tight right now. So it might make sense for you. It's something to have a conversation with your mortgage broker. If you want to reach out to me as well, I'd be happy to walk you through what potentially your semi would fetch in the market today and what a potential detached that you're looking at or an area that you're looking at would get you to kind of give you if it makes a lot of sense for you to make that transaction right now. Next up, we're going to be looking at specifically each product type. So I'm going to start with the detached, and basically this is a score out of 100. So heavily buyer when it comes to the score for Aurora Detached at 31. It is improving. It's up 3 points month over month. Our confidence in the signal is high because we've had enough sales to give us a good idea of what the data is telling us. So demand, we can see 30 sales. It's the best since 2024, so we get a little bit of an uptick on the score here. Inventory, though, sitting at 160 active with a 5.33 months of inventory. Prices sitting at $1,369,000, but that's down 15.3% year over year. Affordability, 2,705 down, 220,000 income. So that's definitely there. And then the macro side, rate cuts helping the margins, but with the rate increases coming down the pipeline, that could have an effect. When we're looking at the sales to new listings ratio, it's sitting at 29, well below the 40 of a balanced market. So something to keep in mind. We can see the active inventory increasing. Sales volume on the downslide, a little bit of an uptick. Price trend has been nothing but coming down. And then sales to new listings ratio did peak up a little bit, but then has rolled over. When we're looking at the townhomes, much stronger than what we're seeing in the detached with 48 out of 100 rating. It's improving up 13 points. We definitely saw a lot more demand in the townhome side. Single confidence is a medium. We had 12 sales, so the data's not terrible. Sales to new listings ratio sitting at 43, so in a balanced market when it comes to the and then looking at demand, double month over month. So 12 sales. Last month we had 6. Inventory sitting at active months of inventory just sitting at a 2.42. If you've got a townhome that you're looking to sell in Aurora, it is a market for you to put in right now. Looking at the condo apartments, just sitting at 20. It's not good. The inventory sitting at 6.5 months of inventory. Prices quite volatile now just because so few sales. Affordability, it's the luxury point in Aurora, definitely. Sitting at the price of $778,000 for sales. Average days on market 32. We're looking at sales price of 96.2%. So there's definitely sellers that are letting it go for quite a bit cheaper than they normally would. And then looking at condo towns, really struggling. I've got it sitting at a 12. Signal confidence is low because we only had 2 sales. but we've got 37 active listings on the condo town side in Aurora. So definitely, if there's an area that you're thinking about buying, sales sitting at 10, there's a lot of negotiating power that buyers have for the condo town market in Aurora. If market that you want to get into, definitely some patience is needed. Throwing out attractive offers to some of these sellers, we're seeing them, sell at their asking price. When readjustments happen, coming in definitely work in a market like this. And then looking at just specific neighborhoods, Aurora Grove is definitely the best of the best when it comes to strength in for neighborhoods. Median price, months of inventory, 57 days on market, and 95% of the average sales to list price. So yes, we're seeing absorption happen quite quickly, but we're all sellers take quite a bit less than what they're asking. Instead of sellers in this particular market just repricing homes, the reprice, they clearly have offers coming in and they're just accepting an offer they had in mind or a price point that they had in mind anyways, instead of relisting and then selling it for 98% of that price. Bayview Wellington sitting at 35% sales to new ratio. Bayview Southeast same. Aurora Highlands 34, Northeast 33, and Aurora Heights right down at the 26. So a lot of struggle bus markets here. Definitely for buyers. These are explore if the price points make sense for you. Yes, I think prices are going to come down even further. How further it remains to be seen. I think we've already seen quite the carve out already, but definitely worth keeping your eye on if you are here. So let's jump into the rental market now and see the strength here. Relatively, it's quite a stable market since we over the last couple months, because seasonally not a lot of people like to rent during months. So we should start to see the price move back upwards towards the 3,200. We had 49 leases. Months of inventory sitting at 2.23, which is strong. Lease sales to new listings ratio sitting at 55%, so firmly in a buyer's market. The one bedroom market has been kind of interesting. We saw quite the wave to start 2021 and into 2022, but it's been quite stable since July 2023 up until now. We've deviated below the trend, but again, I think that's January, February market. It was pretty crummy this year, so I don't think a lot of people got out there to see these places. 2-bedroom rental did see quite a bit of strength coming up until January 2025, and then it rolled over, and it's starting to make a little bit of a comeback here. So sales to new listings ratio at 58%, so in a nice balanced market. New listings sitting at 24 with 25 active. So 2 bedrooms definitely moving in the right direction. And then the rental 3-bedroom market, it's just like new market that I cover. It's starting to see some struggle. Again, not a lot of new families not entering Canada. We're actually losing people in this country, and a lot of that's going to be happening in the 3 and the 4-bedroom market. Although I will say the sales to the lease sales to new listings ratio 79%, which is quite strong, and the rental market, the months of inventory sitting at 1.33. So definitely showing some strength here, but it's definitely not showing up in the price. And then the 4-bedroom rental, actually seeing some strength here. In new market, we're actually rolling over, but good to see that the 4-bedroom is remaining above the trend line that we've seen since 2021. So that's it for the Aurora market. If there's any other data that you're looking for specifically, you want to know what your home is worth, you want to know what you can rent your unit out for, if you're a buyer that just want to get an idea of what areas in the market you think you potentially could fit into, please reach out to me. I'm happy to provide you with all that information. Visit my website, meetmatthew.ca. I've got fantastic tools there for first-time home buyers, downsizers, upsizers, landlords, you name it. There's information there for you to succeed in this market. Thanks.